Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Obviously, as we kicked off our hour, we talked about how there's a lot still continuing to come at investors when it comes to trade and tariffs, the tit for tat. You've got the EU and US not making much progress when it comes to their trade differences. China has stopped taking orders when it comes to deliveries of Boeing jets. The Trump administration has inherited has initiated, I should say, some trade probes when it comes to semiconductors and pharma imports. The trade flow continues and the tariffs continue or seem to be. So we wanted to once again check in with Edward Fishman. He's senior research scholar, professor at Columbia University School of International and Public Affairs. We recently talked with him about his new book, Chokepoints, American Power in the Age of Economic Warfare, and he is back here in our studio. It is good to have you here because as this continues to go on, the longer it goes on, we continue to think about what are the economic repercussions that could be the future of the U.S. How are you thinking about that? How is it kind of evolving the longer this goes on?
Yeah, well, first of all, thanks for having me back on, Carol. So look, a big theme of my book, Choke Points, is that there are these choke points in the global economy, areas where one country has a dominant position and there are few, if any, substitutes. And these choke points have been what have been primarily used for economic warfare. The dollar and the U.S. financial system is the most important choke point in the global economy. It's the one that America has relied on for sanctions against Iran, Russia. And the thing that has been...
Because by everything being dollar denominated, that means in order to transact, right, it's got to go through dollars. And basically we have control over dollar denominated assets.
That's exactly right.
And those points throughout the financial system.
That's right. I mean, I think if you just look at it from a numbers basis, I mean, America is something like 10% of global trade and 90% of foreign exchange transactions involve the dollar. So the dollar is being used in transactions that have nothing to do with U.S. goods being traded from one country to another. So I think the thing that has been most concerning to me, frankly, over the last week or two of when Trump has really escalated the use of tariffs is we have seen, I think, for the first time, at least in my professional life, real concerns that the dollar may be losing some of its safe haven status. And this obviously is concerning from the perspective that we all understand in terms of the dollar's role as the world's reserve currency is necessary for the way that we run our political economy, the way that we fund budget deficits. But I think also from a geopolitical perspective, there are concerns that if we were to undermine the dollar's role in the international financial system, it would significantly constrain the ability of the U.S. government to impose impactful sanctions on foreign countries.
The impactful sanctions is certainly one part of this, but the other part of this is the global economic world order, or the economic world order, I should say. And just the fact that the U.S. and the dollar have really stood at the intersection of so much. When you talk about that being at risk, what exactly do you mean? What, in your view, could happen?
Right. So what would it mean for the dollar to lose its position as the world's reserve currency? I think at the very baseline level of it, the dollar, by virtue of basically there being limitless demand for American treasuries, we have not had to balance our budget in decades, right? So I think were the dollar actually to just be another currency and U.S. treasuries just to be another form of sovereign debt, we'd actually have to worry about things like what does our fiscal situation look like in the United States?
Explain that, carry that out for people who will be like, I'm not making the connection. Because I think so much of what's happening in the last week and a half, we have to understand how this all connects, right? Because I think people, I don't know, just walk it through for us.
Sure, yeah. So right now we run deficits, budget deficits every year at something like 7% of GDP, which is significantly higher than it has been historically. What that means is we take in less revenue than we spend as a federal government.
Right.
The way that we plug that deficit, the way that we finance the spending that doesn't come from American taxpayers is through issuing debt that then is in the form of U.S. treasuries, right? Part of the reason that there's effectively limitless demand for U.S. treasuries is because of the dollar's role as the world's reserve currency, because it's considered this safe asset that, you know, in any time of need, basically you can always turn it into cash at a relatively stable level. But what we've seen in the last week is something that's quite unusual, where treasury yields have gone up as the dollar's value has actually weakened.
Right.
Because normally you'd expect as treasury yields go up that the dollar would strengthen because there'd be more demand for American assets. What this suggests is that there's something going on that there might be this new risk premium being built in to American assets that hasn't existed before.
The new risk premium notwithstanding, what would you say to somebody who's listening right now or watching right now and says, wait a second, this could be a good thing for the United States to start only spending the money that it has every year?
It's a fair point. At the same time, it would require a massive change in how all of our lives work, right? Because the lion's share of American federal outlays every year are in things like Medicare, Social Security, entitlement programs that Americans rely on.
Yeah,
so,
I think Elon Musk has brought that to attention many times over the last couple of months when talking Doge.
Right. Although that has not been a focus of Doge, right?
Exactly.
If anything, you've seen expansion in things like Medicare Advantage payments, right? That has been covered in other Bloomberg media recently. So look, I think that we would have to have a substantial cut in government spending. And by the way, a concomitant rise in taxes. But I think there's a broader point that's more near term, because there are people in the Trump administration orbit who actually view the dollar's role as the world's reserve currency as bad for the U.S. economy, not an exorbitant privilege, but something that undermines our export competitiveness. Because, and just to spell this out in sort of plain English.
Makes our goods more expensive.
Exactly, right. But what we're seeing is that, yes, if the dollar is valued at a lower level, then there will be specific sectors of the American economy that may be more competitive on global markets, right? But everyone is hurt by a weaker dollar, because also all of us in the United States are paid in dollars. So if our dollars are less valuable,
right,
we have lower purchasing power and we are poorer, right? Our paychecks go less. They don't buy as much for us.
Isn't it also important to talk about trade deficits? Everybody thinks bad trade deficit, but that also has implications as well in terms of demand for dollars, right? And it also, we want to be buying things because that gives people dollars, and they in turn can buy U.S. based assets. Right? There's like this relationship as well.
That's right. Yeah. I mean, the flip side of a trade deficit is that we have financial asset financing that's coming into the United States. Right. We have other countries who are investing in American assets. Right. So that is why you need the current account and the capital account have to balance. So a current account deficit will mean a capital account surplus, right? So that's right. I think if you truly were able to balance American trade, you would, by definition, have less capital coming into the United States.
Can I also ask you, don't we have a service surplus?
We do, yes.
And is that a good or bad thing?
I think it's a great thing. I mean, look, I think there's been this, memes now about should Americans be, screwing in screws in iPhones or something like that.
Right.
I think most Americans, frankly, would rather work a services job for the same pay than working in a factory.
Well, that was the whole idea with globalization in the 1990s. If you go back, and that was sort of the promise that we were told by politicians.
That's right.
Let's move the jobs to other countries, and what we'll do is we'll retrain the workforce here so they can do more service-oriented jobs and jobs that are in a different part of the economy. That didn't end up happening.
Well, I mean, to be fair, up until recently, we've been at full employment. So we haven't had massive unemployment in the United States.
True, but I mean, if you go back even to the first Trump administration and the analysis of why he won states and why Democrats lost in a lot of these areas, there was a lot of criticism that these were areas that had been hollowed out with the loss of jobs moving abroad. And that seems to be still what the president is speaking to at this point, to go back to an era where those manufacturing jobs come back.
Yes. Look, I think that clearly there have been regional effects that have not been distributed equally. And there are parts of, for instance, my home state of Pennsylvania that have been really hit hard by this process, right? And so I do think that the federal government has not done a particularly good job at figuring out how to, continue to provide a decent standard of living for people in these regions of the United States. What I would say, though, and if we're going to take Trump's arguments about manufacturing seriously, I think the best argument isn't so much about unemployment, because as we've discussed, we have been at full employment. There is a lot of service sector employment in the United States, right? The best argument is really the national security argument, where there are potentially some aspects of manufacturing where you would want domestic sources, right? And by the way, even Joe Biden, going back to his presidency, imposed 100% tariffs on Chinese electric vehicles because there was a view that we didn't want BYD to eat Tesla's lunch, right? We didn't want Chinese EVs that were better, more efficient, cheaper than, the EVs made by Tesla and GM to come in and swamp the American market because it's a security concern if we're dependent on Chinese cars, right? So I think there are specific sectors where this is a relevant point for national security. The harder,
I mean, we have defense manufacturers,
pharmaceuticals,
so we really,
pharmaceuticals,
right? Exactly.
I agree, and I've written an essay in the Boston Globe a month ago in association with my book Chokepoints about the pharmaceutical supply chain. This is something that certainly the United States needs. Not only more domestic sources of manufacturing, but what I would call trusted supply chains, right? You don't want to be reliant on China for, pharmaceutical additives, right? Do we want to do everything domestically? Do we want autarky? I don't think so. But do we want to be less reliant on adversaries like China? I think that's a very worthy national security goal.
So going back to your book, Choke Points, I'm thinking about China and how they are wielding kind of their choke points. I thought about the tariffs and the kind of salvo that they lobbied back at the United States when it comes to rare earth minerals. Like that is very targeted, and many would say very, very smart because of their incredible control over it. It's not that we don't have it, but they are set up in a much more productive system, right, in terms of refining and so on and so forth. Walk us through that and how they are fighting back.
Yes. Thank you for bringing this up, Carol, because I think one of the things I've been most frustrated about in terms of the coverage of the U.S.-China situation in the last week is this discussion of a trade war, right? We're not seeing a trade war. We're seeing something much broader. We're seeing a multi-domain economic war in which tariffs are just one weapon that's being used. And in fact, they're not even the most powerful weapon.
Yeah.
If you look at how China's retaliating, right? Yes, they have tariffs that they put on American imports. But if you're just going tariff for tariff, America has more to tariff than China has to tariff because we're importing a lot more from China than they're importing from us. But what China's been doing since 2018, since the first salvo of tariffs came into place, they've been preparing things like export controls on critical minerals that America relies on, from everything from batteries to ammunition, right? They've been sanctioning U.S. companies. So PVH got sanctioned recently. Skydio, the biggest drone manufacturer in Silicon Valley, was sanctioned. And now they've got to ration batteries. Each customer now only gets one battery per drone, right? Which is pretty absurd when you think about it.
Yeah.
Illumina, the big DNA sequencing company, got sanctioned by China. You're also seeing things like anti-monopoly investigations into NVIDIA and Alphabet, right? So China is not retaliating in sort of a symmetric manner only. They're also fighting asymmetrically.
Yeah, great stuff. Thank you so much.
Yeah,
so
my
appreciate that you could come in. Edward Fishman, senior research scholar and professor up at Columbia. His book is Choke Points, American Power in the Age of Economic Welfare. This is Bloomberg Businessweek Daily.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
We are going all in on higher education right now because there is a lot happening when it comes to Washington and elite colleges and universities. President Trump escalating his administration's fight with Harvard by threatening its tax-exempt status after the school defied the government's demands to change its policies in exchange for billions of dollars in federal funding. Also, that's not all. You'll recall that a bit less than a month ago, the president said that the Education Department's $1.6 trillion student loan portfolio would be handled by the SBA. That move coming amid worries that his efforts to overhaul the federal government could reduce programs and services. So we've got a great pair of voices to talk about higher ed. Janet Lorin is higher education finance reporter for Bloomberg News. Jillian Berman is here, too. She's assistant managing editor for News and Enterprise at MarketWatch. She's also the author of a brand new book. It's out now, Sunk Cost, Who's to Blame for the Nation's Broken Student Loan System and How to Fix It. They both join us here in the Bloomberg Interactive Brokers studio. Janet, I do want to start with you and Harvard because I think it's fair to say shots fired.
Yes, for sure. Yesterday, Harvard released a letter that was sent to it last Friday by the government, by a multi-agency task force, sort of stepping up their demands if they want to continue their flow of billions of dollars in federal research funding. They released that letter along with one from two law firms saying they were not going to accept their demands. And said there were certain lines that they could not cross in terms of academic freedom. They had a whole list of things such as the government wanted curbs on doing things in admissions and governance and hiring and lots of things. And they said no. And a couple of hours later, the federal government said we're freezing $2.2 billion in loans. I'm sorry, in grants.
It's a big deal.
It's a big deal, and it's a lot of money. And you say, well, but they have a $53 billion-dollar endowment. Why can't they spend it? Well, 70% of it is restricted, and it isn't a bank account, but certainly, they have some liquidity. They have a $1.5 billion line of credit. We saw last week they issued bonds of $750 million, but it is a lot of money because 11% of their entire budget comes from the federal government in these research grants.
I got to say, when we talk higher education, there's just a lot of money either way you look at it. Now, someone like Harvard has a huge endowment, which gives it an incredible cushion. Having said that, I want to pull out a little bit and talk about the money that is in higher education. We all remember, is it 10, 15 years ago, that headline that came across that said college debt was higher than credit card debt. And we all stopped and be like, how did we get here? Jillian, come on in on that side of the story. This is what you get into, because I think we spend so much time. How did we get to this point? How did we?
Yeah, so there are several different factors, but that headline you talked about really came in the wake of the Great Recession, and that was a huge moment for the explosion in student debt. We saw states pull back from funding their public colleges, which means students and families had to take on more of that funding. Obviously, families didn't have as much money to tap themselves or equity in their homes. And then also because of the sort of loose labor market, students who graduated with this debt had trouble finding jobs that could help them repay it. So the Great Recession was, sort of a really big moment for student debt.
It's a unique problem to the U.S., though. And this is something that doesn't happen in other countries. But at the same time, we also have the best, one could say, we have among the best universities in the world. Not every one of them, but certainly these are institutions that are recognized internationally. What is so different about the U.S. system that allows something like this to happen?
Yeah, so the way that we fund colleges in the U.S. is largely through students. So, it's sort of like a voucher. The student decides where they want to take that government money. In a lot of other countries where, we think about having little student debt, the government is doing more direct funding of the schools themselves. And, that design of the system here in the U.S., that was on purpose. We like to have, what we call like diversity of institutions and, sort of the ability for the market to play out. So
in the Trump administration has said they're interested in, of course, shutting down the education department, which after 2009 began dispersing the loans. And now we're at a huge amount. I think it would be the 5th largest U.S. bank in America. Is moving it away from the education department to another agency, Trump has said, as small business, SBA, would that be reasonable?
It depends who you ask. I think, the way, there hasn't been much detail, first of all, about that plan, but I think the way that they envision it is, maybe moving some of the staff at the Department of Education that handles this stuff over to SBA. Even still, I think people who work on these things are worried that it could cause a lot of disruption. We already have some evidence that the staff cuts have caused disruption for borrowers and for students as they try to access those funds. So I think it could pose some challenges.
I kind of approach this differently now that I have kids, because now I need to save for college.
It's going to cost you $1 million a year.
Well, that's what I'm wondering. I mean, everybody sitting around here does have to think about.
It's funny, but not funny.
You're done, Carol.
I know, but
you're not done yet.
No, I'm not done yet, because there's, we're also in an environment where it's like, okay, now go get the master's.
But when I was in college, it was like, okay, in the $20,000 to $30,000 per year. Now we're at what, Carol? Roughly?
60, 70, 80,
90,
Okay.
90,
Right,
everything all in,
Okay.
total cost of attendance.
Yeah.
I was thinking then it couldn't get any more expensive, Jillian, but that obviously wasn't the case. The system has to break at some point, no?
Yeah, I mean, people keep saying that, and we'll see. I think that some of the disruption, caused by the cuts at the Department of Education may, push some things in another direction. Also, a lot of people have done some reporting on how Gen Z is really less interested in college, and so, that could put some enrollment pressure on these schools and force them to bring down the cost.
How much fault do you put at universities and colleges where the price just seems to go up and up and up, and they're like, we've got to pay because it's for teachers, it's for facilities,
Deans,
XYZ, yeah,
Deans and food.
Like, how
nice
is it
dorms.
that it has outpaced inflation many times over?
Yeah, I mean, I think the argument that I take in the book is that in a lot of cases, the colleges are sort of like responding to incentives created by the system. So, I mean, one big example is if you talk about graduate school in the mid-2000s, the government allowed for people to start borrowing up to the cost of attendance for graduate school. And then kind of shortly after that, the number of master's degree programs exploded at universities. And
there's a financial like pipeline.
Right, exactly. Yeah. And at the time, like even Republican lawmakers, didn't really think that much about the consequences of that decision, and if you were to ask them now, that would be a no-go.
What about loan limits? Are those have been talked about? Certainly they're in place for undergraduates, but for graduate students, instead of up to the cost of attendance, what do you think would happen there?
So that I think, some congressional Republicans are interested in doing something like that. I think in a lot of ways it makes sense. And then, of course, there's other people who will tell you, well, if that happens, then you're going to be sending people to the private market where, often there are fewer protections. So it's like a tricky balance.
Or not as many will go to school.
Right. Or not as many will go to school.
Which some have argued, we all laugh about it, but it's not funny. But, you need a plumber, an electrician, or somebody in the construction industry. There's you're fighting for these people, and they all talk about it, that there's nobody there to do these things, and whether or not we go back to tradespeople. I know that's another argument.
Right, exactly, yeah.
So Jillian, we talk about this in the context of what's happening in Washington right now, and a lot has changed in this administration, and we're at a point where I think it's fair to say that the Trump administration is in a combative stance with colleges and universities right now. How do you look at what's happening in Washington as really reshaping higher education in the U.S.?
Yeah, I think, part of the reason that there's been some political will for the kind of stuff that the Trump administration is doing is because of questions around the value of higher ed. If people thought that they were getting their money's worth, it would be harder to attack these institutions. So, I think it will raise some questions about, about that going forward.
In your view, Janet, is it realistic to think that in an institution like Harvard, for example, could lose its tax-exempt status?
It's hard to predict anything these days.
What would it do to an institution like Harvard?
So Harvard doesn't pay property taxes. Unless it's a business expense, like if they run a parking garage, they would pay taxes. They're able to issue tax-exempt bonds. They do pay an endowment tax as of 2017. Their donors get a tax break. If you give money to Harvard, you get a tax break. So there's a lot of things, and especially going to the bond market, they just had taxable debt, but they do have the ability to have tax-exempt debt.
So, Jillian, where do you see this going, right? Because it just feels like the velocity continues, the debt continues to grow, it continues to be a story we, talk about, and it really is difficult on a younger generation who want to buy homes, perhaps, and have families, but they're stuck paying off their college loans, and that has an economic impact.
Unfortunately, it seems like we may be stuck in the pattern that we're in for a while. There's not a lot of political will to change the system. The people who have the power to do it really are Congress. And, part of the reason why we've had so many changes in policy and borrowers experience so much whiplash is because the executive branch has tried to do it, but, they only have so much power, so it just gets reversed the next time.
Do you anticipate that more kids might go outside the United States for college, and that could at some point have an impact?
Oh, interesting. I don't know. That's definitely often advocated as a cheaper option. So we'll see.
Yeah.
I was talking though to somebody recently, and even the schools outside the U.S. aren't even that much less expensive at this point.
I was going to say,
then you got to pay for them to get overseas on a plane ticket.
Yeah.
Sounds like you've been thinking about this, Janet. Hey, Jillian, before we let you go, if we're talking in 5 years, do you think this problem will have gotten better or gotten worse?
Will there be sunk cost part 2?
I think maybe, unfortunately, the way it's looking, not better necessarily.
Glass is not half full in any way.
Glasses, I guess, you know what, there have been some states that have, really tried to invest more in helping their residents go to college. And we actually have seen evidence that the cost of public college on average is going down a little bit. So it's unclear if that trend's going to continue, but maybe it will.
I remember, was it Bloomberg who did the survey, and they said, or was it Jared Dillian? I don't know. It was either unless it's Harvard or an Ivy League, that state schools increasingly.
That's Jared's view, basically.
You get more bang for your buck in terms of, but I thought we did some research too.
I think you guys, had a good piece about, sort of the value of a lot of different public colleges.
The ROI, the return on investment, right? And in terms of so maybe, people start to think more closely.
Yeah.
It's fascinating. I can't tell you how many times it comes up. And whenever we have anybody, right, from a college, it's like, why does it cost so much?
And they don't always have a great answer.
Yeah.
That's true.
Yeah. Good stuff. Jillian, thank you so much. Good luck with the book.
Thank you.
Jillian Berman, author, Market Watch Assistant Managing Editor, News and Enterprise. Her new book, Sunk Cost, Who's to Blame for the Nation's Broken Student Loan System and How to Fix It. How long have we been talking about this? A long time.
I mean, my entire career.
Unbelievable.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.